In this chart, we're going to look at the establishment of a number one position in a potential top reversal pattern. Now, with this example, of course, we're cheating because we're seeing the whole 1, 2, 3 pattern as it subsequently unfolded. But let's just try to ignore as much as possible the information to the right. Let's just pretend that we're looking at this in the live edge of trading somewhere around this congestion top area. Okay, so what are my clues that we might be seeing a number one position in a 1, 2, 3 top unfolding? Well, first of all, I'm going to draw this common sense trend line. And as you can see here, we have a total of 1, 2, 3, 4, 5 hits of support on this trend line. And this is a daily chart, so we're talking about a very extensive period of time here. If you counted up all the individual daily bars, this is many weeks going on here, actually. The price has been rising. It's been in an uptrend for quite some time. And then what happens is we have this very decisive break of this common sense trend line with this very bearish candle here. And we can see that after its close, the parabolic SAR has flipped its bias from long, which is sort of, you can read this as almost like as a support signal underneath price, to short. Okay, when parabolic SAR is above price, it's essentially telling you, in a very simplistic interpretation, to be on the short side of the market, not the long side. And it's most profoundly important when these guys flip from one bias to the other, when happening in conjunction with a lot of other indicator events, of course. In any event, we had this common sense trendline break just punched through very decisively. Now, the slow MACD setting, which is this middle panel here, we can see that throughout the entire course of this rallying market, this bullish market, it had retained its bullish bias. Okay, staying above the trigger line, above the water line, continuing to rise with some fairly reasonable angle. It did not go bearish on us one single time throughout here, and you can see this is just really a great illustration of how handy this setting can be, because in a trending market like this, the slow MACD was telling us to stay long, stay long, stay long. When price collapsed here, slow MACD retained its bullish bias, and here it was telling us to stay long right throughout this entire segment here. But when price breaks through this common sense trend line, the slow MACD setting finally gave us a bearish crossover. And what we need to do in this context is read that as a pretty serious signal, because you can see we had no bearish crossovers for months and months and months, and now we're getting one occurring with this common sense trendline break. Now, the faster setting MACD, we can see to the left, we got an earlier bearish crossover. But again, the way we read these MACDs is we're reading one off of the other. At this point that we get this bearish crossover, the slow MACD is still fundamentally bullish. It's starting to look like, sort of quote-unquote overbought, but there's not a lot of compelling evidence that this thing's finished yet. So we would probably read this crossover as a fake out. But if we're here and thinking about a number one position, we're looking at the behavior of this guy, the fast MACD, and seeing what he's doing over time. What I was able to do is connect two kind of swing points on MACD, the same way that when we draw divergence lines, although in this case I'm not looking for divergence, I don't see obvious signs of it. But I connected these two swing point lows, and what I saw happening at this roughly the same time as this other stuff going on is MACD broke its own trend line. And it's really interesting how often indicators they unfold patterns or behaviors that are similar to what happens on price. This is like a support line on MACD. MACD broke this support line and came back and retested this broken support as resistance right here. And you see these sorts of things happening often. It's quite an interesting phenomenon. And then finally, after breaking this trend line, MACD punched through the water line with some angle and separation as per the MACD trend cycle concept that we were talking about. It penetrated through the histogram and went into this quasi oversold scenario down here, the gap between MACD and the histogram and so forth. And then we're jumping ahead here a little bit, but you can see that that happened on the fast MACD just at the point where price found support on this 100-period moving average, which is quite interesting. In any event, we now suspect with these events happening, a profound break of a common sense trend line, slow MACD finally crossing over bearish, parabolic SAR on the daily chart flipping bearish, trend line break on the fast MACD trending down with angle and separation. All of those things coming in the midst of a very protracted uptrend gave us pause to consider whether a topping out process might be starting to unfold here. We don't see any obvious chart reversal patterns at this point. This is just congestion on a top. But what you want to do when you see a long-lasting trending market like this, an uptrend in this case, when you see price finally start to unwind, a logical target or expectation for how it might go, how far it might go initially, is support on a 100 or 200 period exponential moving average. You'll often see this. Price comes down, it gets supported on this trend line here, and then it bounces back off, which is what happened. So anyway, cobbling together all these events, including these very important indications on the two MACD panels, you can see how they can be used to help establish the possibility of a number one position in a 1, 2, 3 top. Okay, so we've seen that we have reason to believe a number one position in some type of topping out process has been achieved. We're now going to take a look at what's going on subsequently. We have a bullish crossover on the fast MACD. The slow MACD is continuing to trend down. So that puts this fast MACD crossover in context. It also puts in context this rising price action here. But what we see happening at the time of the bullish crossover on the fast MACD is we have a classic Tom DeMark style supply trendline break here, a swing high here connecting back to a prior swing high. And price then breaks this supply trendline. Where did it do that? Well, it did so after price found 1, 2, 3, 4, 5, 6 hits of support on this 100 period exponential moving average, this orange line here. Okay? So, as I mentioned, that's a good target when you're expecting a number two position to unfold. See what happens when price tests one of these major moving average trend lines. So we got multiple hits of support here. Price lifted off, broke this trend line. So it's starting to go up, and we're wondering, well, how far is it going to go? Is it just going to, take off into the stratosphere? Well, this is where our slow MACD can really help us again. Okay, we see price rising, but now slow MACD is clearly trending down. It's got some angle and separation here. It kind of hugs its trigger line here, but it doesn't penetrate through. We don't have the histogram flipping to the other side. This is a fundamentally bearish reading we're getting from the slow MACD. So fast MACD, trendline break, etc., etc. And also we have parabolic SAR flipping again. It was bearish through here all the way down to the support on the 100 EMA. Then it flips to bullish. The dots are now painting in on the underneath side of price action here. So we've got some kind of short-lived looking bullish signals flashing at us, but we're putting those in the context of this slow MACD, and we're using that to form the belief that we're going to see a number three position in a 1, 2, 3 top unfolding. Now here's a technique that I learned from a video presentation by a gentleman by the name of Michael Jardine, and his video is entitled Simple Fibonacci Trading, Profitable Techniques Anyone Can Use. He's providing a handy little way of conceiving of the number two and number three positions and confirming turning points there. We've already got one confirmation for MACD, but we're looking at when we believe we have a swing point, a number two swing point, what we do is we look at a three candle paradigm. We look at the swing candle itself and the candle on either side. And what we do is we establish a range within those three candles, a high and a low. So in this event, this candle to the left here, this snippet is just a blow up of what's going on over here. The high is on the candle to the left of the swing low candle, and we can draw that in. And so the idea being, is a very simplistic interpretation, is when price breaks the high of this range established by these three candles comprising the number 2 position, potentially that is an additional confirmation signal. So again, a break or close above the high established among the 3 candles comprising the swing low confirms the number 2 position. It may confirm it. And actually, if you want to scalp away, you can use that as a potential entry technique. Okay, so let's recap what we saw happening on this chart. We saw in the background reason to believe a number 1 position was unfolding. We then saw a bullish crossover in the fast MACD that validated a Tom DeMark style supply trendline break. Price had achieved multiple hits of support on the 100 period exponential moving average. We saw this range breakout on the 3 candle swing point paradigm, and then again parabolic SAR had flipped from bearish to bullish. All the while, slow MACD still trending down, which puts this in context as a possibly short-lived price action. So that's one way you can use multiple settings of MACD and other things going on in your chart to identify and confirm a potential number 2 position in a 1, 2, 3 top. So far, I think we've had a not too difficult time interpreting number 1 and number 2 positions, but in this particular example, it's going to get a little trickier trying to peg the number 3, and that's just the way it goes. We have to develop the ability to see the paradigm unfolding and superimpose it over price action and make some educated assumptions and just stick with them. So we have a number 1, we have what we believe is a number 2. Now we're going to look for some clues of a number 3. First of all, over often to this area after price has rallied the wrong way relative to this downtrending slow MACD, we have price punching very decisively through this Tom DeMark style demand trend line. So we saw a swing low here, we connected it back to the prior swing low here, extended the trend line out, and you can see price has rejected that trend line now as support anyway. Subsequently, what we're looking for is a crossover on MACD to validate this trendline break. But unfortunately, we don't get a clear, clean signal. It goes really fuzzy on us. MACD refuses to cross the trigger. It hugs the trigger, goes sideways on us. We don't get the histogram bars painting in below until here, by which time the market has moved off this area very, very decisively. So if we were just waiting for this signal to confirm us in, this is a daily chart. It's just one time frame. We ought to be looking down lower to a 6-hour, 4-hour, 2-hour kind of scenario to help us peg this a little bit more. I just don't have enough room on this screen to do that. So in any event, price had rallied the wrong way relative to the slow MACD, and we had the trendline break. Now what we're going to do is we're going to blow up this area of price action, because if we're superimposing that pattern, we don't see price lifting higher than here. It's not coming down decisively just yet, but this looks like it could be a number 3 spot because it's a high in amongst all this price action. So I'm just drawing the lines again on this 3 candle paradigm, this swing point kind of range concept. We have the swing point potential number 3 position here. We then look for the low amongst these 3 candles that comes here. Price did break through this swing point low area. It did come down a little bit, but then again, it came right back up again. And that's just the way it goes. Price does not respect these paradigms as the gospel, so to speak, in all occasions. But again, we have to form educated assumptions as to what's going on here. We have to be able to impose these patterns and make educated assumptions. So we had a prior crossover on the slow MACD in the background, maintaining its bearish stance all the way through here. We had a bearish crossover unfolding on fast MACD, but unfortunately it didn't give us confirmation until kind of too late. But we would counteract that by looking for clues on a lower time frame, such as the 4-hour. We had a Tom DeMark very sharp angled demand trendline break, and you could have just made the assumption that these trendline projections are often, they're powerful. So if it hasn't gone down by here, it's going to go down. These things hold very well. So we had a Tom DeMark demand trendline break. We had this range breakout on the low of the swing point, the number 3 position, and then The parabolic SIR had flipped bearish yet again all the way through here and retained its bearish stance, and that was telling us to be thinking to the short side, or helping us anyway. So a fuzzy picture, but we go ahead and conclude this is a number 3 because price is not taking out this high. It is remaining below there and is just dipsy doodling for a while. So we go ahead and we assume that we've seen a 1, 2, 3 standard top reversal pattern unfold on this daily chart, and then we drill down looking for opportunities to trade it.